welcome. In English, thank you. Is anybody invested in royalty companies? Hands up. A few. So do we need to go back to 101? I'm Tim Gallagher, by the way, and the CEO of a company called Royalties, Inc. I'm just trying to show, to start, the idea of investing in royalties as an asset class. So generically, if you think about royalties in other businesses, it would be what I'd call a sales royalty, right? So if you invented something and you got a royalty off your invention, even if it was a drug royalty, it could be a solar royalty, oil and gas royalties. But curiously, in the Canadian market, we have 31, 32, including ourselves, mining royalty companies. We do have actually a handful of other ones, a handful of oil and gas royalty companies, pizza royalty companies, business royalty companies. And the idea behind it is that it's a de-risked version of investing in the underlying business. So you would say, in the case of mining, there's a lot of work to be done to get into a mine, to get a percentage of a revenue. Sometimes it takes a decade or two to do that. So these companies, starting at the top with Wheaton Precious Metals and Franco-Nevada, the most famous of the group, they literally started off as a couple of people saying, let's not be in the mining business, but let's just try to collect the cash flow, a percentage of the revenue on a bunch of mines. So technically speaking, it's an investment company, and it's also really has no costs. Now, we put, just for reference, on the right, the number of employees that they have. And the point of that in the extreme is to say a normal business traditionally might have $100,000 in revenue per employee or in cash flow terms. So if you had a $1 million business, you had 10 employees, that'd be $100,000. Well, these businesses can have, we think about that, $30 million in cash flow per employee, because they're not in the business. They don't have the employees. It's just collecting percentages of revenues. So it's really kind of a genius asset class that doesn't even have a category. Because you say, when you come to the markets, are you in cars? Are you in food? I mean, there's no category for royalties. And I happen to know that there's one fund in Switzerland, private fund called Partners Group, that's actually trying to advocate what I'm trying to describe today, which is allocate maybe 10% of your investments to royalties as an asset class. And within that asset class, decide how much you want to put into the gold, silver, lithium, copper royalty business as opposed to oil and gas, as opposed to business royalties or drug royalties. But it's a very low risk business because, again, they're not actually doing the business. They're not moving trucks, they're not getting permits, and they're diversified, when you get bigger. So the second part of the royalties idea is that it's as an investment business, all of these companies more or less started literally at zero. So Franco-Nevada is the leader in the business, number 2. It started in the 1980s with 2 people, Pierre Lassonde and Seymour Schulich, and it was a $2 million market cap. Well, you can see now it's basically a $70 billion market cap, so they, as founding shareholders, have done very well by, in quotes, not being in the mining business. So that's the most important part. Now, we're a company that did one called Metalla a few years ago. It's done well. It's almost $1 billion. It's number 11 there. We're doing it again with this company, and we'll get through it, but it's a curious investment company in the sense that we have 3 assets. So just to give you the big picture, we trade at as P8T on Frankfurt. It's not a lot of trading. We trade on the Canadian Securities Exchange. We used to be a pure play exploration company in Mexico, so we still have that polymetallic or silver asset. So we have 3 assets. So you're investing in a company that's, as I said, is really an investment company with the old silver asset in Mexico, which we're trying to monetize, and basically the fact that the silver price broke out in November through the $50 high of 1980 and 2011, finally put this asset on the map, and we think we'd like to go back to do some work on it because there's the high-grade zones, but ultimately we want to monetize it. We want to sell it, we want to spin it off and create a bunch of cash so that we can go and buy cash flowing royalties. Number two, when we were starting this business in 2019, we did a deal to buy a royalty, a 2% NSR, as it's called, net smelter return, which is the nomenclature they use in mining, on Capstone's Cozamin mine in Zacatecas. Now that has turned into a dispute because they basically transferred that royalty to themselves without notifying the owner or paying for it. So it's like I bought your house by transferring the title without telling you. So we won the lawsuit last June. They appealed. We won the appeal, and then they've taken it to the federal court. The federal prosecutor in the state recommended denying that appeal, but we're still going to have to wait a few months probably to have the federal judges, side with us, and then we'd have to end up going through a settlement or collection process. The point of that being that we think it's worth $40 million US, and going back to that first slide when I was showing you the examples, I didn't emphasize a big point, but they basically trade at a 1% dividend yield, which sounds remarkable, and it's probably a longer discussion, but it's just because it's a lower risk, higher margin business, it trades at the equivalent of the S&P dividend yield. So the idea is that if we started collecting from that royalty, notwithstanding we think they owe us $10 million for the last few years that we have owned it in our minds, because the original deal goes back to 2002, then we think we should be worth 100 million market cap just for that alone. And number three, the curiosity, which is why we sort of moved from the mining business in one sense, was to a category called music royalties. So of all the royalty businesses in the world, music royalties or content copyright collected royalties are the most interesting because there's millions of them, first of all. Every song, every book, every film, everything that's been created has the copyright law behind it. And that means it's the remaining life of the author. So if you had a young author and they were 20 and they lived to 100, that would be taking 80 years of their remaining life plus 70. So the reason why we got excited about that is because you're essentially saying you have these cash flows that are 100 to 150 years long, protected, what I'd call a monopoly, which is now on the internet, and nobody owns them. So we all know this hit content, these hit songs. So we started this business privately back in 2018, and to date we paid out $15 million in dividends. And again, it takes longer than I have here to explain it, but suffice it to say that all that streaming revenue that's been generated, billions of dollars every year that you didn't know about, is owned by a rights holder. So unless you know somebody who's in the entertainment business, who's a musician or a writer, a composer that's collecting a royalty in Germany, it's called GEMA, G-E-M-A. They, along with all the other countries around the world, are paying out, the big ones anyway, are paying out $1 billion a year. In the US, they're paying out probably $6 billion. So in music alone, existing music, there's about $20 billion a year being paid out to rights holders. So the idea is not just to give you, one piece of your favorite song from one of the 10 owners of that song, but to have a diversified portfolio. And over the last 8 years, we've bought 31 catalogs that happen to include very exciting things like pieces of the Rolling Stones, The Who, The Kinks, Dire Straits, one-hit wonders like Dancing in the Moonlight, 7,000 songs. So the only goal is to tie your bank account into these performing rights organizations like GEMA or PRS in the UK, wherever you're from, BMI or ASCAP in the US, and have that money go into your bank account like it's a monthly pension. So three assets in our company, and they seem probably a little bit disconnected, but it's all under the label of we're just trying to be the Franco-Nevada of music royalties. It's going back to our silver asset, with the silver price leverage, every $10, which is shown there as the different scenarios, is really showing the value of the property. And of course, I like to explain it more in simple terms. If we all just owned a simple little mine that was producing 1 million ounces of silver, and it was $30 for a long time, $30 million business, you're making a little bit of money, and then all of a sudden out of nowhere it goes to $100, then we all share an extra $70 million in cash flow per year on this little mine, this little silver mine. So that's the leverage that's tied into, obviously, I don't think you'd be at the conference if you didn't believe silver, as an example, is going back through 100 and beyond, maybe $200-$300 over time. So we think the silver asset is very valuable, but it's probably more valuable to us if we spin it off into a separate vehicle to somebody who keeps drilling it and working it. So we have this drill plan here based on the asset that we had done a PEA on in 2014. 6 million tons of material. At the time, it was only $100 per ton rock. Now, with silver and higher grade material, you might be targeting something that's $700 in revenue per ton, up to $1,000 per ton. So we're excited about getting back to doing some work on that and spinning it off to create value. And the best way to describe it is, in the red circle is the existing deposit with the existing PEA, or economic assumption on the old deposit. As one example of a bunch of veins that are outside the main deposit is this high-grade material. And you can see, if you look at these grades, 31 grams in every ounce. So if you've got 310 grams, you've got 10-ounce material. And to make it simple, 10-ounce material or 10-ounce silver at $100 makes it $1,000 per rock. It's 10 times more valuable than it was when we did the PEA back in 2014. So silver asset has value. The 2% royalty on the Capstone mine called Cozamin, which is just outside the city of Zacatecas, is, let's put it this way, we have a 2% net smelter royalty that we have on the red area, which is called the Portree claims. The part that's in production, if you look at that yellow dashed line, is what's in production. So we're essentially saying that we believe that they should have been paying us at least a third of the royalties that they've been paying out. They paid out $5 million US last year to a company in Mexico, and then the purple claims is paid to a company that's on our list here, number 12 on the royalty ranking. And I have some of these sheets, by the way. It's a great page for the royalty universe to see this universe of the mining companies and the other industries. But Gold Royalty Corporate is a new royalty company over the last 3 years or so, and they're getting 1.35 million from just the purple area. We believe that Capstone is working its way into drilling the main part of our Portree claims, and so we think there's a lot of future value in that. And so it's sort of a calculation on finishing the lawsuit and estimating what they should be paying us, but taking these are their maps from their website. You can see the reserves there and our little postage stamp part, like call it 10% of the holdings that we have. You can see it's all been mined out. So it's not like they haven't been producing on there. So they owe us money, and our estimate is 10 million US. And this is just various versions of it to extent you want to do your own calculation on estimating it. But that's where I came up with the idea that it was about a third of the $5 million in US dollar royalties that they've been paying. Now, you can't see this one very well, but this is essentially a chart where I'm saying, okay, well, when we did the deal, and this is when you get to the settlement collection phase, hopefully in the next few months, they were a $200 million revenue business. 2% of that is $4 million in royalties, and we're saying about a third. But with the increase in copper, and copper was $2 a pound when we bought this acquisition, and silver was $20 or $30 at the most. But we think, over the next few years that copper could double and silver, likewise could double or triple. So this is just really saying, if we put an estimate on those, that's the leverage of the potential royalty claim. And remember, when you have a royalty, there's nothing to do. It says, look at your bank account and make sure that it came in, right? In this case, we have a collection effort. But if it grows to $500 million in revenue at 2%, then it's a $10 million US royalty, which is fantastic. And also, we might have the potential of selling the value of that royalty, which at that point would be worth at least $100 million, to one of those other players that are on that list on the first page. So now on the music royalties front, I just want to point out the private company is what we're ultimately trying to merge with the public company. So if we can cash up the public royalties company And we're using, just to make it simple, a goal of buying 10% yield. So if we had 30 million in cash, we'd be able to buy 3 million in annual royalties, right? And we think that that would trade, down to a lower yield. And that's really what we've done privately. So when we started the private company Music Royalties, which is something that we've raised 30 million from over 300 investors, we bought 31 catalogs, as I mentioned, different interests in different things, so that we now have 7,000 songs, and established a monthly dividend. We've now paid out 74 monthly dividends to the tune of about $15 million. And that idea is what we're trying to bring to the public market. Because in the great big world of planet Earth, there's no public music royalties company. We all know the content that we see on Netflix or listen to on Spotify or YouTube or Apple or TikTok, but nobody's brought these private streaming cash flows. And maybe to put it in a bigger perspective, 20 years ago, YouTube and Spotify were really just getting started. So since that time, they remarkably have paid out over $100 billion. So just those two companies have behind the scenes paid out $100 billion in cash flow to the rights holders, meaning the creators and the musicians behind those songs, which is just, to me, an amazing thing. 70% of the costs of Spotify are going to the rights holders, back through the big four music companies, for part of it, and the rest of it through the performing rights organizations like GEMA, that are collecting the money from the radio stations and so on. So it's an amazing business, and the origins of this idea are, of course, the public mining royalty businesses. That's really just a Canadian story. Nobody really talks about public royalty companies, anywhere else in the world as a category. There's one or two that I can think of in the UK. The only one on the list that I showed you in the mining world that's big going way back is Royal Gold. But otherwise, it all starts from that Franco-Nevada story being told so many times and going essentially from the equivalent of investing $10,000 in the 80s would mean that you would have $200 or $300 million in your bank account today. So it's a phenomenal success story, a roll-up, if you want to call it that, an acquisition story that people don't appreciate. And we're just trying to bring that in these 3 steps to the public market. So I know there's a lot there, and we're just outside here on the right in booth 27, but any questions for the moment? How am I for time? Okay.